Hey guys, how you doing? Welcome back to my YouTube channel, I Stand Capital. Today we'll be looking at something that literally changed the game for me, right, in recent times, and I've been applying that to my trading, and I've been seeing massive results, right? I literally took an account from, let's say, 6% drawdown, yeah, 6% drawdown to over 3% in profit right now. Actually, 3 point something, I think 3.5 now, so in profit. Just using this in 1 week. Because I literally like abandoned the account and I just like because like, how would I put it right now? I was in drawdown, so I was trying to be very, very careful trading the account, right? And I didn't want to make any mistake. But once I take a trade on the account, I would close some trading profit too early. There were different things that was going on in the account. So on that 1 week, I was able to clear the drawdown and go into profit ASAP, just using this method, right? And trading is mostly psychological, it's not about strategy. Most of the time, it's about your psychology, right? So, but using this, I'm feeling very, very confident to wait for it to print will give you like an upper hand in the market, give you an edge in the market. This I'm very, very sure of, right? What you need to do is what have a selective group of pairs that you trade, 2 pairs, 3 pairs, 4 pairs, maximum should be five. In my opinion, maximum should be five. And you look for opportunities. One, two, three, four opportunities a week should do the trick for you, right? Should do the trick for you. So let's jump into this right now. Let me just show you what I mean. So if you are a beginner, this might not be friendly for you. But if you're an advanced student, like if you're an advanced forex trader, you know what liquidity means, what fair value gap means, then this video is perfect for you, right? It's perfect for you. So let's jump into it right now. So what I tried to do is what is trade the breaker block, trade the breaker block plus QMR combo, right? This is what I try to trade most of the time. Like if I was in a do or die situation, like, what system would I trade? I will trade the breaker block plus the Quasimodo reversal combo, right? So what I want to establish right now is, I want to, first step is to identify my order flow. What's the order flow, right? What's the order flow? I don't want to trade go against the overall trend of the market. What's the order flow? If the market is making higher highs and higher lows, right? Most of the time, that's the bullish order flow, right? It's most of the time. I know what I'm saying. And is is the as the what's it called? As the internal range liquidity been cleared, right? Has it been cleared? Has internal range liquidity been cleared? Like there's no need for the market to go below or go above. You feel me? And you need to have a clear draw liquidity. Sorry. I don't know why this is always speaking this one. There needs to be a clear draw on liquidity, right? Marketplace where the market is going to, right? Um, Now you could use this as a recent high. Like if you don't want to aim for too much, you could use it as a recent high and take your 3 hour, your 4 hour, put it in back and get out, right? Or you could target the main high. Yeah, it's instances where you do that. You feel me? So once I identify the order flow, right, and the order flow has a clear draw on liquidity, right? The next thing I need to look at for what is higher time frame breaker blocks, right? Higher time frame breaker blocks. Now this could be what? The daily time frame, weekly, or H4. I literally don't like to go below this, right? So you guys know what an if a breaker block is, right? So it's a failed supply or a failed demand, right? It's a failed supply or a failed demand. So this is usually a supply zone, and this is usually what a demand zone, where you're expecting the market to do what to buy from, right? You expect the market to buy from, and this is what a supply zone, person what market to do what to sell from. You feel me? So let's say let's say I'm trying to establish the breaker block bias first before we go to the Quasimodo part, the pressure pattern. Like, let's say the market is making higher highs and higher lows, right? They're looking higher highs and higher lows. Now, there'll be instances where markets will create liquidity here. This will give you an idea that the market wants to do what? Wants to operate from this breaker block. If you understand liquidity concepts, you know what I'm talking about, right? So you know that the market does not need to come, into these zones. Market does not need to come into this area, to peak and move up, right? Now we established the trend, the order flow, right, which is bullish, right? Now market has engineered liquidity here, right? So we know that the market wants to do what? Wants to there's a 80% chance the market wants to operate from this, failed failed supply zone. This is a failed supply zone, right? As a breaker block, a failed supply or a failed demand. The market wants to operate there. Why? Because of the liquidity it created just before that area. So as market now comes into this breaker block, right? This is where it gets interesting. Now, I would want to wait for what? I would want to wait for a reaction, right? A reaction from this breaker block, and the market needs to print a Quasimodo reversal pattern. And what's the Quasimodo reversal pattern? It's very, very simple. Very, very simple. You have to buy. There are different mix of this. We have this where market to sweep liquidity, right? Sweep liquidity, to break structure to the upside, create inducement, break again, or could have this sweep of liquidity, no, sorry, right? And then we could have this sweep of liquidity, right? You feel me? And there's also the sell. There's also sell, like the same thing, sweep of liquidity, control to the upside, right? Sweep of liquidity. Uh, so it's engineered liquidity right there. And also what? Sweep of liquidity. Right. So once you have this model, this is Quasimodo and the Quasimodo entry. This is Quasimodo entry. So once you have this, right? Once you have this, I would want to use this as my entry. So let's say this breaker block, right? This breaker block pattern right here was shown on the daily time frame or on the 4-hour time frame, right? So let's use the daily time frame now. Market gets into this breaker block, right? You don't buy straight up. You don't buy straight up. especially when the supply candle is somehow big, right? You don't use large stop loss, right? So what I'm going to do is what? You're going to look at this leg right here. You're going to look at this leg right here. This leg that takes price into this zone, right? That is the key, that is the most important part of this video, right? That leg, most of the time will look like this, right? Markets making lower lows, lower highs, lower lows, lower highs. So when you get into that zone, that let's say the breaker block is around here. So you'll be watching price on the lower time frame, the next time frame. So let's say this would be the 4 hour or the 2 hour time frame. Mind you, the breaker block is on the daily time frame, right? So this is the daily time frame on breaker block right here. Daily breaker block right here, right? So this daily breaker block right here. And this price that is coming down could be on the 4 hour time frame, on the 2 hour time frame, right? The 4 hour time frame or the 2 hour time frame. So you're watching price. As soon as price gets into this breaker block, right? You don't want to start buying directly from the breaker block because one, it could your root to reward is somehow lower. It could be maximum of 3 or 2. You feel me? And you don't use like 50 pips stop loss, 60 pips, in some cases, 150, 200 pips stop loss. If you're observing the rules perfectly. But if you want to do this, right, the best better entry is what? Number one, you wait for the mark price to get into that breaker block, right? Get into enters the breaker block, right? And gives you what? Your sweep of liquidity, right? Sweep liquidity, right? And then price will now print your QMR pattern, right? And then you expected to do what? To buy from here. You're not expected to do what? To get your entry from here. Now, if you want to know exact place to buy, right? You go to the line chart. The line chart would reveal these lines to you. The market price will look like this on the line chart, right? So that becomes your cumulative level. This now becomes your liquidity. And this now becomes a better, what's it called, buying range for you. A better buying range for you. And now you can now what? Get bigger targets. Now instead of getting a 2 hour trade, you're like getting a 5 hour trade, a 4 hour trade, a 6 hour trade. In some rare cases, a 10 hour trade. You feel me? So these are the ways you can basically use this to your advantage. So I'm going to show you guys a few examples from just last week. Just last week, right? The trades that I took just last week using this simple model, right? I took around let's start with what's the word? Let's start with USD JPY. USD JPY is so I took a lot of good trades last week. To be honest, I can't lie. Cannot even lie. So coming into this USDPY, right? Coming to USDPY right here, I send this out to the public channel too. If you're on the public channel, try and be on the public channel, right? Try and get on the public channel. It's very, very important. If you're not there, use the link in the description of this video. Just check the description of this video. You see the link right there, and you join us. Iceland Capital on Telegram, right? Join us ASAP. So looking at this, right? One of the criteria for me using a breaker block is I need that supply. Let's say this is your supply now. I'll need the supply to get violated, like with one with one engulfing candle. Very, very important. So once price, I will know that there's an imbalance right there. The market needs to come there and fail to buy up. So when I see that engulfing candle, I know okay, it adds extra confluence to my trade. You feel me? So let's continue. I'm just trying to like place the disclaimer right there. You feel me? So, anyways, So I told you guys, this is your supply. This is my supply right here. This candle right here is my supply. Right? You can see the way the market violated this supply with one candle, right? And you see this candle right here. Good. So we go to the line charts. You see this becomes my failed A-shaped key level. It becomes my failed A-shaped key level. So that becomes a reference point for me to know that okay, this is where I want things to get interesting. Now, if you want to buy this market, right? If you want to buy this market straight up, you have to put your entry around here, right? And put your stop loss around here, and you hope for the best, right? This will be daily time frame. Now, let's say targeting just 2 hours. You'll still be waiting for price to go to your TP, and this after many days of 1, 2, 3, 4, 5, 6, 7. In 1 week, you've not gotten 2 hours. In 1 week, you've not gotten 2 hours. Right? In 1 week, you've not gotten 2 hours. So there are ways you can actually navigate this properly and get your bread and get up in the market. So that is what I did. So the market has come to this level now. I saw this market come to this level. I saw this all I needed was what my sweep of liquidity. That's all I needed. So this was the first low the market created. So I started observing this on the 4 hour time frame and the 2 hour time frame, by the way. So you go to the 4 hour, I told you guys you go to a lower time frame, right? So you can see this the market was making lower lows and lower highs right here. Right, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Right, this was a series of liquidity. Market broke structure to the upside, but there was no inducement. Like I told you guys, there was no inducement. Can you see this? There was no inducement, so there was no reason for me to take a trade from there. Right, there was no reason for me to take a trade from there. So what's the word? I held off. Plus, there was no break of structure to the upside, like clear break of structure to the upside, right? So this is the 4 hour time frame. So this is the 4 hour time frame. Now, in the 4 hour time frame, what can you see? You can see a sweep of liquidity. Market now sweeps liquidity again. So this is the same pattern again on that breaker block, right? Sweep of liquidity right here. The market now did what? Now created inducement. Now, which one is this? This is number 3, right? This is number 3. So in this number 3, where are you expected to buy from? Let's buy from this line. Market should come down to this level and buy. That is what you're expected to do, right? So you come into the USJPY right here, right? You come into the USJPY right here. So where are you expected to buy from? You go to the line chart again, and it's on the line chart, very clear. This line right here, simple as that, right? So that key level, right? There's your QM key level, and this becomes your inducement. And easily you got in your trade. You got in your bread, right? Just easily you got in your bread, right? And this is over 3 hour profit made, right? Almost 4 hour profit made. So if you're targeting, you can target this eye right here, right? If you're trading profit, 3 hour to be okay for you, right? But if you want to hold on for this eye. This is as simple as it is, right? I sent this out publicly too. Here's JPY. Very, very simple. Using the same thing. Now let's look at another one. USD card. These are all from last week. These are all from last week, to be honest. These are all from last week. All right, so let me just clear this. Just clear this. Should I? Yeah, let me clear it. Oh. All right, okay, it's not the same thing. Not the same. No. I needed something from a breaker block perspective. Yeah, not the same thing. I was not. This one is a little bit different. Something that I'll teach you guys later on. Right, using higher time frame fair value gaps. Right, market sweeps liquidity and buys. So that'll be for another day. To be honest, that'll be for another day. I did one more on US oil. Yeah, I was buying US oil. Let me just clear out this ASAP. Let me clear out this ASAP. So I got a 1 to 2. Was it 1 to 2? I don't know if it's 1 to 2. I already closed the trade though. I already closed the trade. I already closed the trade on US oil. So looking at this right now, you can see this is your breaker block right here. This candle, like I said, right? This is your candle right here, and you can see with market validated it. It's one candle right here. So that is your breaker. This is your breaker block, and this is your key level. Right? See, this is your key level. So what I did is the same thing. I did not just enter directly. I didn't just enter directly from the trade from the breaker block, and put my stop loss around here. Right, 1,200, 120 pips stop loss. No, it's not possible. Not possible. Right, and then hope for the best. No, I don't do that. You go down to the 4 time frame and see what's going on. See what's going on. So what I did was going to the 4 time frame and say, okay, this is what's going on right here. I have a sweep of liquidity right here. Now, this sweep of liquidity is very, very important. Very, very important to me. It's a very, very important one. How is that? So I went to the 2-hour time frame. Went to 2-hour time frame. I saw that okay, this low. Let me show you something. This low right here was the low of the previous day. This was the low of Thursday, and swept on Friday. Right? This now becomes what? Inducement. This becomes what? Inducement. So going by this logic, my entry was on the 1-hour time frame. Yeah. Yeah. So this now became inducement for my trade. This becomes inducement, and this level now becomes my level to buy from. Do you understand? Now becomes my level to buy from. So this now becomes inducement. So it's like sweep of liquidity, the same pattern again. I think it should be pattern. I think pattern 2. Yeah. So this is your low right here. Sweep, inducement, break, tap, and buy. So that became my entry, right? So I place my long position right here. Close like this, and you target here the eye right here. So I closed at around 2 hours. Close around 2 hours, 5-4, right? Around 2 hours. Because it was Friday. But what on a normal note, I would be closing the trade at 4 hours at this eye. Right? Using the same um the same process, right? The same trade, the same thing. So I think I took another one again last week. Let me just come to my trades. Okay. Let me check. I think I was one on GPS. Let me just try. If not, move on. It can be okay. I'm trying to look at only last week trades. Entry where they are. All right, perfect. Yeah, I love this. I got in on Euro USD instead, but I saw it happening on GIF USD. So if I'm buying Euro USD, there's no need to buy GPUSD. You feel me? So let me just try and check it out properly before I make up anything. Come in. Yeah, I think this would have been a missed entry for me. Well, it's still the same logic. Still the same logic, though. Yes, it's still the same logic. So let's look at it. Let's look at it. Without even changing anything on the chart, right? I saw this. Without even changing anything on the chart, right? Using the same principles that I talk about. So to go to the 4-hour time frame, check it. Even go stuff in the daily time frame first. Okay, let's go to the 4-hour time frame. So yeah, looking at this right now, yeah, looking at this right now. You can see this is supply zone right here. The supply zone right here. This candle is supply, right? The supply zone right here. Most people were trying to sell from here, right? Most are trying to sell from here, right? And then they got stopped out. So this is a failed supply, right? You can see the way the market blasted through it. That's a failed supply, right? So you can see again, this is also what now becomes liquidity. I told you, once you have liquidity to that your failed supply or your failed demand, failed supply and failed demand have covered what or breaker blocks, right? So also you have your failed supply or also have liquidity to your breaker blocks. It adds what confidence to it. So, anyways, this if you go to your line charts, right, you see this area you need to what this area you need to use as your what as your level, the breaker block key level right there. So once the market comes in, we can see the market is coming in, making what lower lows, lower highs, lower lows, lower highs, and then tap into the zone, right? Tap into the zone. Now I want to see what a sweep of liquidity, right? Market swept this low right here. So this is a sweep of liquidity. So let me go to the um let me clean this. So you can see the way I already marked it out that I want to buy from this line. And you see, I already marked out previously. I want to buy from this area. So I didn't take the trade. I didn't take the trade too, by the way. I took Euro USD. I took Euro USD. For Euro results, and I'm acting entirely. Not this, not the QMA. I didn't use the QMA for the Euro USD. So the market came into this breaker block, tapped into the breaker block, right? Created inducement. This is your inducement right here. Right? This is your inducement right here. This count is your inducement right here. If you go to the key level, this becomes your area to buy from. Can you see that? It becomes your area to buy from. Now, looking at this is the 2-hour time frame. You don't need to go lower than the 2-hour time frame. It becomes your sweep of liquidity. Now, a trade that could have given you, let's say, a 3-hour trade. This is a very, very good example, by the way. Very, very good example. Now, a trade that could have given you, let's say I bought directly. Say I bought directly from this candle, right? I bought directly, and I put my stop loss around here, right? And I targeted the next external range liquidity. So I targeted somewhere around here, right? I could have made 3.41 R, right? Just 3.4 R, which is not bad, right? It is not bad. Now, if I use this confirmation entry and place my entry here using the QMR pattern again. Now, I told you guys the sweep of liquidity is very, very important. It's very, very important. Like, fucking important, guys. Right? And I add the same target again. Right? Put down there, right? This is almost a 6-hour trade. Almost double what you have gotten using just buying directly from the other breaker block key level right there. So this is just something for you guys to think about and use in your trading, right? And using your trading. Now, this is a very, very nice setup, very, very nice setup, very, very nice trade. Yeah, market comes to the breaker block, gives you a sweep of liquidity, right? A visible sweep of liquidity, creates inducements. This inducement broke through to the upside. Can you see that there was a visible break of through to the upside with this candle? This becomes your inducement, right? So it's basically something like this, sweep of liquidity, break, inducement, break, tap, bye-bye, right? Bye-bye. So that is it about that on GPUSD, and that would be the end of the video. If you guys like this content and you like to see more, please like, subscribe, share this video to your friends, your trader friends, learn one or two things. And I promise if you apply this using just a 3-hour, all you need in trading, right, is a 40% win rate, a 3-hour risk to reward ratio, right? stop loss or take profit, no in between, and you make a lot of money. That is the truth, right? That is the truth. These are ways you can just refine your trades. So sort of taking 3-hour trades now, you can now go from 3-hour trades to what 4-hour, 5-hour using this modification. But the truth is, you don't need much in trading. Less is more, right? So prioritize risk management, prioritize taking quality setups. If you don't see your if you can't find an entry, leave the market alone. Let the market print what you want to see, right? Let's say if it doesn't print what you want to see, do not engage. You don't engage. So, anyways, if you want to join the free trading community where we share ideas, send setups daily, weekly. We have a weekly market outlook together, right? We have classes together for free. If you want to join that, you can use the link in the description of this video. Just check the description of this video. You see the link right there. You join our Telegram, and that'll be it for now. See you guys in the next video. And may markets be with you.